Hi, David here with Futures Trading. Want to say Happy Father's Day to all you fathers and mothers that's taking care of the kids. Happy Parents Day to you as well. But let's get right into it. I did not officially release the consecutive close price pattern. Okay, I want to officially do that now, and just want to kind of give you a little bit more information about it as well. So if you would like, stick around. Hopefully, for just the next 10 minutes, I'm gonna try to make it as short as possible. The next 10 minutes, I want to, introduce this pattern to you officially. All of the videos on the channel, when it comes to the trading guide, I want to make sure that the videos are somewhat short because this information is really simple and it's not to, essentially have you just listen to a bunch of rhetoric that you can't, find on the chart. So I want to make it really simple for you. Also, if you would like to see me trade the prop account, because I did that during the volatile times, you can go check that out, the FOMC and off the open. I tried to pick the two most volatile times that people tend to have the aversion to. They, tend to, I guess, shy away from it. You can see me actually trade both of them, the FOMC, the off the open. And in both of those videos, I'm using a 15-second chart. And so I have a 15-second chart here in front of you. You do not have to use one at all. You don't have to use one, but I want to have it for brevity's sake. I want to keep the video very short. And so I want to have this here so you can kind of see the price pattern is happening over and over and over again. And I have a 1 minute just down below. So I have 1 minute down below to kind of help kind of filter out some of what's going on here. You can use whatever time frame you want. This is the consecutive close method, and I just put it like this. I have a filter in it based on price, but it's something that I can't reveal to you. But for the most part, it's stripped down. It's stripped down. Just price is, and again, the filter that I have is based on price as well. It's just I cannot show you what it is. So there may be an occasion where you'll see that a signal should have been there, but it wasn't. All right. So let's get into it now. Clearly they're in the range, and this is kind of why I wanted to shoot this. All right, they're in the range, and we'll use some of the market structure information. I'll leave that video below so you can familiarize yourself with that. You can take out that leg, just don't take out this one. Now I pretty much think that they should blow this high. I'm gonna be honest with you, but let's go ahead and take a look at the price patterns, and then we're gonna dive right into it. They stopped here. The mid of the turn is important. I'll put that in there for you. They stopped here. The mid of the turn is important. And so let's throw just a line on the mid. Now you can go with the mid of the hammer. You can go with I like to go with the reversal bar itself, the green one. They close beneath both. Moral of the story, to close beneath both. This turn is weak, as well as this turn up here is weak. They closed above the mid of this bar is high. So both of them were kind of getting sandwiched in between. Now, this is just one criteria for a reversal pattern. I think both of these patterns are absolutely weak. All right. That's one criteria. So now they waved up. Now let's look at the market structure from this side, kind of put that in front of you. They pushed up, they turned. Now remember, if you get past here, or if you want to go a little smaller, kind of, reduce your risk a bit, you can say, hey, if you go past here, and it depends on how you're doing it. If you get past here, I believe you're up. All right. So if you don't want to reach all the way back there, that's fine. So if you go here, and then the push up here, you can go past here. Okay. Just don't break that. And so you get a push up here and they went up there. And if you get past here, you can kind of piece it together reasons why not to be in the trade. All right. So if you get past here, just don't go past that. They went past that, but they didn't want to break that. So there's a chance they may want to go up. All right. Now that I did that for you. So that's market structure, kind of give you some context because you don't want to trade any other price patterns that I release without context. You want to make sure all of it goes together. All right. Really, really important stuff. All right. So now we got that out the way. Whenever you get a bar, doesn't matter the color. I'm not big on color. I care less about the color of the bar. And we'll talk about why. The close is above this bar is important. Now, my crosshairs is right here because I want you to intentionally look right into this. All right. I want you to look at that. Just look at that. And you'll see why I say I do not care about the color of the bar. I don't. Okay. Let's look at this and you'll understand why. There's an acronym under this bar. All right. An acronym will show up under this bar once these two bars close. And so we're going to dive into that real time in just a second, but I want to outline to you what that price pattern is. All right, so you got this bar. I don't care about the color. And then you had two bars that closed. Well, give me a second. You had two bars that closed above it. All right, above this bar's high. And in some cases, the high may be the open, whatever. And we'll talk about that in two. But there's two closes above this bar's high. It's a red bar. All right. I don't care about the color. I don't. So one, two, they closed above it. The acronym will show up here. All right. So the acronym would show up. under that bar. That's how I coded it. All right. So with the acronym where the stop need to be at. That's what I want for the indicator to do. Tell me where my stop need to be at because that's the only price that matter. I don't care about the color of the bar. I care about the price. Where do price need to be? So this instance, you have a bull bar. This one, you have a bear bar. Still the same message. They supposed to go up. So then they stall out for with a whole lot of candles that don't have a body. You can call them whatever you want. I don't care. Gravestone dojis. I don't care. Whatever. Dragonflies, whatever fancy names you want to put to them, it doesn't matter to me. It's just prices. All right. So the low of this bar here is 88.23. The low of this here is 88.33. So 88.33. So they never broke this bar's low. There's a push up. All right. So now we got that out the way. And so this is what it's supposed to be. Now you would take this scenario and you would flip it to the downside. All right. So you would go like this. I just want two closes beneath this bar's low. If it's an up bar, you would say, hey, I still just want two closes beneath that bar's low. Doesn't matter. All right. Now let's go back and look at the real time. Just wanted to touch on that so you can see that this information, it works on any time frame. And again, this is some old keep the price flat, but they told you something before they did that, and there's a pop. So I want to outline that for you. Now, in this particular price pattern, you don't have to wait until both bars are closed. I have to say that too. If this bars, remember I taught you the other price pattern with the no touch of the mid, and I'll have the links below for that information as well. If this bar's high is not touching that mid, the hard stop there, no close back beneath this bar's low. All right. So that's another pattern you can kind of bring into focus. You don't want them to close back beneath this price, hard stop here. It should turn around and go back up. And I told you to reject it twice pattern too. You can go back and take a look at that video. They hit this price, they hit that bar's close two times, it should go up. All right. So that you kind of build a confluence of information as to why it shouldn't do, something that it's doing. So you can rewind the video, you can take a look at all of this information because I'm gonna try to make this as fast as possible, but efficient enough that you can understand it. All right, so this price is important. Remember, I told you I care about prices. I don't care about the bar, what kind of bar it is. You can call it whatever bar you want. It's the price levels that's important. That's how you should trade. All right. So they're rejecting the price. Say, hey, that price is important. They shouldn't close under this bar. And it's the span of the price axis here. How much ground can they cover in the amount of time that they can cover it? That's important to me. And so hard stop's supposed to be here. Okay, so the hard stop supposed to be there. So even if they manage to close under this price, you just don't want them to trigger that price. That's for that price pattern. Well, they just did it. That's fine. Now, I tried to give you get you caught up to that information. Now, you still have that same scenario here with the hard stop here. It's kind of the same thing. No close back beneath this bar because this bar is high, is not touching that mid. Kind of the same thing, but they're turning it. Okay, so you flip the scenario. This bar is mid. Okay, not being touched. No close back above here. Hard stop there. Now, you'll see the C's popping up. Maybe not in every scenario. I told you that before we got started. You may not see it in every scenario because there's yet another price filter that I'm putting on the signal. I can't tell you what it is, but there's another price. And if you can figure it out, then hey, take it with you. But you may not see it on every bar. Like here, well, no, they didn't close beneath that low. I'm sorry. I thought that's another price pattern I'm about to reference. But the point of it is that this bar, okay, they're referencing this one. You don't want them to go past these C's too far either. That's another thing. It's okay to get past one, maybe even two, but you don't want to see them do too much. Now you got to blend in the market structure too. Now, just make sure you blend in all of that information. There's a C here. There's one here too. I think they might have went past it. Let's see what the low is here. 83.89. Let's see what the low is here. No, they stayed above it. So they stopped at where is it at? Where is it at? No, it's this one. It's this one. They stopped at this little guy right there. I thought that C was for that one, but it's not. It's this one. All right, so they stopped for this one right here. This little guy. Thought I put the line there or put the box there. They stopped for that little guy right there. All right, so. Oh, they might do it. So let me tell you this. they get a close above the open of this bar, but then immediately come back and close right at that open or below it, they might can go that way some more. I want to tell you that before, because it can wind up running down the board back this way, and I didn't tell it to you. So if you're trying to catch reversals, here we go. If you're trying to catch the reversal back up, let's say you want to go back up. Now, this can be the bull play to go back up, but I want to tell that to you right now because it can very much just blow right through this because of how fast it did it. All right. So this bar is high, open, if you will, because it's a bear bar, closed above it, but then they immediately came back and closed right back at its open. They can go this way some more. So just kind of keep that in mind. So now let's look at the consecutive closes on the way. All right. So close beneath this bar is low. 1, 2, C pops up. All right. On this bar's close. There's some more to the downside here. Now you can trade this based on how far now you see how the C popped up there because the span of the run away from this low, kind of like that no touch mid thing, it can end up being that scenario should this bar not be able to race back up there and close at that bar's close. There is the hard stop. So it could end up being that scenario in conjunction with the no touch of the mid price pattern. So you want to kind of blend all of this information together. Sometimes the price get really tight and coiled up. Kind of what I showed you here. It can get really tight on you and you're wondering like, hey, what's going on, and there may not be a span of a difference between these two candles that can give you the no touch mid, but you still want to stay in the trade and still be able to manage it appropriately and reduce your risk. And so you can use this can get you a bit closer when they start to stall and do that. It can get you a bit closer. All right, so I just wanted to give you that. Now let's see what they're going to do. Let's see what they're going to do. Now I'm gonna open this up just a bit here. Again, there's another reason why the C's are being plotted to. Again, I don't want to go into all of that. Don't want to do that. But the basic concept of it all is that you just want to get two closes above, this bar's high or this bar's high. And then we had two closes above this bar high. There's the C. All right. So let's see if they can get back up. Now, again, let's look at the structure of it because I kind of went over that before we got started because they're coiling up and they're kind of sitting in the range, and you want to know how to trade the range. Hopefully, this video could help with just this price pattern. All right, so the low down here was important, and then we're going to kind of tidy this up a bit. Hopefully, they can break to one side or the other. Okay, well, hopefully they can break to one side or the other. All right, so let's kind of leave that there for now. All right, so they don't suppose to get past here if they plan on going back up. Now remember they're up here. You can kind of see all these C's. Let's just put a line, put a zone right here on the back of this one. Let's just go with that. They're definitely in there. And then we have, of course, this information here. We can just say that little guy right there, this little guy right here. So let's see what happened. That's really tight. Yeah, I think that's fun. So let's go with that. And then they even gave us some a bit more tighter here. So we got another C that just popped up here. I'm gonna open this up so you can see it. They just gave us another C that popped up here. So let's it's really tight. And I want to show it to you in real time. That's why I'm shooting this video, because I want to show it to you in real time, the price patterns. I try to do these on a weekend with Bitcoin so you can see it. And it doesn't matter the market. It absolutely don't. All right, so they got past that. That's fine. Just wanted to see if they'll give a rotation off and then we'll go through it. But just to trying to show you how this price pattern can play out too. And again, it's nothing complicated. It's very simple stuff. I like to give you information that you can essentially explain in simple language to the people that you care about, how you do your job. Now of course, if you're an astronaut, engineer, anything in that capacity, you can't have a job that you can go explain to somebody in simple language. But trading, you should be able to do that. It's not convoluted with a bunch of stuff. It's just price and time. That's all it is. And so I believe in just simplicity. All right. So I'm not a content thief. I do not steal other people's content. I take what's on the chart and I explain it to you. I know you got a lot of content thieves out here that'll take your stuff and then go build a channel, build their channel on your information. I'm not that guy. I'm not. I try to use simplicity. What's right on your chart that you can see because it's on your chart too. We should have the similar information. And if you're not a someone that trade Bitcoin, I'm not one to trade Bitcoin either. But this stuff should be able to work on anybody's chart. So I just wanted to go ahead and say that to you, that this information is right here for you to learn from on your chart, and it doesn't matter the asset. And I don't have a bunch of funny language in order to interpret the market. I don't. I have just some simple understanding about pricing because I've been doing it for many years, many, many years. I like to tell people that many, many years. It's not just a year or two. I'm an educator. I've been doing this for many, many years. So let's see if price can bust through this zone. Let's see. They pulled the stunt, I guess, earlier, ran down here and didn't want to get through it, and that's fine. And so they're moving themselves back up. Now, if you go with the structure side and bring, I guess, the structure side into play over here, you would say, hey, here's the push up, here's the push down, here's the push up. You can break this leg, just don't break this one. All right. So we can kind of do it from that vantage point there. If you want to go at it from that way. Now, if you go in this way, if you want to do the broad stuff, it ain't leaving you that much of a difference if they break that without going through that high. So I would suggest just kind of go with this. And if they break this, that's fine. Just don't break that. And so now they're doing it again. All right. So doing it again. If they turn around and come back, if you break this, just don't break this. And you might can start moving the stop up a little bit. And then once it, break through here, you kind of just want to see them knock that leg out. Because remember, we went over this over here. That if they break this, you don't want them to break that. And that'll kind of help you kind of get an idea, just an idea of what they're doing. And again, you can do all of this even in the smaller fluctuations, you can do it too. All right. So now let's open this up. Let's see. We're not really getting any signals right in here as of yet. Now, if this bar can push away from this bar's high, there should be a C that'll pop up here, and then you can know that, hey, go ahead and get in on this bar while it's moving. Now we just want this bar to close above this bar's high, and then the C should pop up here. So if that's going to happen, you would gauge the bar timer. I don't have one on the chart. This is a 15-second. You should be able to just know within a span of the candle, it could do it. It didn't. So we still got that scenario to the downside. Now, if you're doing the rejected twice uh, off the mid, you'll know that they didn't touch it twice immediately. So no, that's not gonna work. That's not gonna work. I want to see it happen twice, and I mean fast. That's the most important part. Let's see. Let's see. Now we do have the no touch mid here, kind of using all the patterns, kind of throwing them all at you because it's important. The high here isn't touching that mid, okay? So no close beneath this price level, so they may hold this. They've proven to test it one time, didn't want to close it, ran down here a couple more times. Hard stop here. I don't have the indicator on the board because this is all about the consecutive close. They're just not giving us the consecutive close right now. But this is the consecutive close here. They moved down towards it, and then they came off its low. All right, so that's what you have there. And then let's see if they're going to give us the consecutive close for either up or down. Doesn't matter. Remember, I have this just stripped down. Don't have any any requirement like as far as a moving average. Stay above this moving average. You can use whatever technique you want to use. Trend line. It doesn't matter. Trend line. You can use moving average. You can use Fibonacci. Whatever you like to use, you use that. Okay. You want to use your order flow suite, whatever tools you have for that, you can do that. Just make sure price give you the consecutive closes. Remember, this is about simplicity, most important part. All right. So let's see what we got. They doing they doing this again. All right. Remember, I showed you this early in the video right here where they did that. So let's see if a signal will pop up. There go a signal. There go a signal. Let's see if they'll break it. Yeah, they broke past it. I thought they would do it again for you. Thought they would pop up, but they broke past. All right, so it may show up here if they can close again down here. Let's see what happens. It may do it to the downside. So remember, we have the hard stop for that bar here. That's that no touch. I know you don't see the indicator up here because the video is about the consecutive close. All right, so there's that. Now let's see if it'll push down some more without breaking past this whatever, this bar without a body. Nope, they broke past it. That's fine. That's fine. They reached up right past it. Reached up right past it. That's not going to work. All right, so let's see. We still got the no close. All right, so remember the no close, no touch, mid here. That's all right there. All right, so that's kind of right there. No close beneath this bar, stop behind this bar, hard stop, no close beneath that bar. So we still got that sitting over there too. All right, so let's see. I don't like that they keep drifting down into this. I don't. I know they're supposed to blow this high. Realistically, they're supposed to blow that high. Remember, I told you if they take out the mid, the high is weak. They took out the mid, but you got to make sure that you're reading in context. So it got to be some context there. You can't just go with that and think that they have to, blow it. They don't have to. They moved up to it, and you see they turned away from it. Even down here, they closed beneath the mid of this turn, but they moved up. So just make sure it's in context and everything. All right. So now we're gonna get that C showing up here. Now you do not have to wait. See, there's the C that showed up here. Now you can look at the 1 minute down below. I don't want to navigate both charts, but this is fractal. All right. So you had consecutive closes. The C was here. You can go back and pause the video. When this bar closed, that C showed up. I'm down here on this 1 minute. Let's blow it up. When this bar closed, that C was here. All right. So all of this right here, the stop's supposed to be right there, no matter what they're doing over here. Stop right outside there. And it's kind of the same thing. This high isn't touching that mid, no close back beneath that bar high stop there. All right. So you can kind of just put all that together. Now, because of the span here, there should be another C that'll pop up here. So as they're pulling down, if they pulling down, just as long as they won't close at this price, hard stop here, a C should pop up here, and then they should turn back around and just go. All right, so you can trade this. I guess the fluidity of it, you don't have to wait until the bar actually close in order to know that it's supposed to have a hard stop there. So while it's pushing down, pick it up and just go back the other way. It's real simple, nothing complicated, I can assure you. You just have to be okay with the risk. That's all. So if it turns out to be a loser, just know that, hey, it's okay. Just take the next signal. It'll pan out at some point. I can assure you. This is how it moves. All right. So let's see. Let's see. Can they go ahead and get to it? The 1 minute still working on that bar. So this is just them, pausing, up and down. That's all. That C should pop up here on this 1 minute. Let's see. All right, so there you go. That C came in right there. So the hard stop right there. You were able to move it from here to there. Kind of, it's still kind of the same, but there's the C. It popped up here. You can move your stop from here up to here, and just let them trade. They may want to stall out before they break that high, but there's the C. The C came in right under that bar there. So now let's see if they can break this high. And once they break this high, that'll be the end of the lesson there. And hopefully you'll take notice of the other content. So if you haven't done so, please take notice of the other content because it's meant to be traded as a whole. Everything I'm putting in front of you is, if you're a beginner, it's meant to help you. All right. Now, if you are an experienced trader, you can take the information however you take it. You just need a price pattern or just want to use something for support and resistance. Whatever can help you, just take away the information. But for the beginner trader, try to take all of it as a whole. I gave you the ranges, that's the location, I gave you the static levels. That's again the location, but more in geared towards the price. All right. Where you need to look for the price patterns. You want to pair them together, the price level with the price pattern. And so I gave you the chart scale, which it's really simple. If you don't want to use the range or the price, static levels, which is kind of crazy if you don't want to use that, you can go with the chart scale. If they're in the middle of the scale, you know, then they can kind of go up and down on it. Okay. If they're above the middle of the scale, it's bullish. If they're beneath the middle of the scale, it's bearish. Now you divide the lower half of the scale. Let me kind of move this up a bit. If they're beneath the lower half of the scale, don't go long unless they spend some time, there and then jump up towards the mid, otherwise be still looking for shorts. Okay. It's kind of the same thing. So now they can come to the scale. Well, there's a good 50% chance they can run back to the mid of the scale. And then it becomes very unlikely for them to go, out the other side if they came from up here. That's the only problem. If they came from up here, it's very unlikely they'll go through here. So you still need to be looking for your long somewhere up here, somewhere up here above here and vice versa. All right. So you can go and take a look at that video and that should help you with that. So, but it's meant to be traded as a whole. Take the ranges, that's the location, kind of the time that they like to do business. That's the most important part. I'm gonna leave a video on the channel about that, how to look at the time and the price, and that's going to really help you. And then you'll understand why the range is important because there's meaning behind it. All right, so let's see if they can get through this high. And you can see we're still stalling out. They haven't came here. So if you're trying to sell the high, if someone is trying to sell this high, which it is. Somebody still think that this could turn it, and they don't understand that price is actually climbing. And so what you'll want to do is make sure you're going with the market. Try not to always go against it. It's not to say that there ain't times that can happen. You can catch reversals. You just got to make sure that it makes sense. That's all. But try to go with the momentum of the market. It's really, really important to do so. All right. So again, if you want to watch the live trades, if you want to watch the live trades, you can go here. I'm not gonna have the links below for this because it's just entertainment if you ask me. My finances is personal. I just try to do a little bit in front of you so you can you get motivated to take the information. It does work. I trade it every day for many, many years, and so it does work. It's simple. All right, it's not complicated, and I want to give you a chance to see that. I want to say thank you to my added subscriber. I actually have a subscriber here that joined. Thank you so much. I appreciate that. I really, really appreciate that. If you would like, hit a like on the videos. Try to show your support. I'm trying to grow this community. If you guys like the content, please hit the like button. Again, I put more content out. If you can, show support. It's really, really important to show the support because we're supposed to be growing the community. You and me and you, we supposed to grow the community. So hit the like button. You're a part of this. It's not just me. You're a part of helping other traders get successful, to get the consistency that they want. So help grow the channel. Subscribe if you can, if you don't mind, subscribe. But definitely, if you don't mind, hit the like button if you can't subscribe. All right. And if you again find the information just a bit too simple, share the link with somebody that may just need that beginner step. All right. So I wish you all the best with your trading. Again, this is the consecutive close. All right. So I wish you all the best with your trading. Take care.